All right, the last 2 weeks of school we're going to be spending on taxes. First, we're going to look at today using tax tables, tax worksheets, and tax schedules. So our first objective, express tax schedules algebraically, and then 2, compute federal income taxes using a tax table and tax schedule. So where does the money come from for police forces, the space program, military defense, and national security, health research, social programs, and other government programs? Money comes from the taxpayers. There's many different types of taxes that you'll pay throughout your life. There's property taxes, which are taxes that are collected based on the value of the property you own. Sales taxes are collected based on the price of the items you purchase. Income taxes are collected based on the amount of taxable income you earn. Your tax amount is the amount of money you must pay to the government. It is the price you pay to benefit from government services. Federal taxes are collected by the Internal Revenue Service, or IRS, as most people know it. Although people don't like to pay taxes, they are required. And people realize taxes are necessary. You report your taxable income on a form called a tax return. Your filing status is a description of your marital and family status on the last day of the year. You must indicate your filing status on your tax return. The choices are single, which are unmarried tax filers, married filing jointly, or qualifying widower. So married people who fill out one tax return together is married filing jointly. And to be able to do widower, you have to meet certain qualifications outlined by the IRS. Married filing separately is the next one. Married people who file 2 separate returns. And then head of household is the last one. And that's a special filing status for certain unmarried taxpayers who support people in addition to supporting themselves. Like I personally use head of household when I file my taxes because I'm unmarried, but I support my 2 children. Your annual tax changes as your annual income changes. To find the tax on your taxable income, you use a tax table or a tax schedule. Tax tables are easier to use than tax schedules, but with a little algebra, you can master the use of a tax schedule. And actually, tax schedules really aren't that difficult at all because it lays out in the tax schedule exactly the multiplication or addition or subtraction or whatever that you have to do. So they're really not that difficult. All right, before we move on to example 1, let's take a quick look at what a tax table looks like. This is the tax table that goes along with example 1, and it's from the 2008 taxes. The tax table you're going to use for your homework comes from last year, the taxes you would file this year, which is 2019 taxes. Tax day has been pushed back thanks to the coronavirus. People now have until July 15th instead of April 15th to get their taxes filed. So tax table looks like this. This one tells you the to the nearest thousandth what the incomes are. So if you make $51,000 but less than $52,000, your taxes are going to be listed somewhere in here. And then it gives you different bands of numbers, and that tells you, it says at least, if your income is at least $51,000 but less than $51,050, you're going to use this first line. And then it does have 4 different numbers, one for if you're filing single, one for if you're filing married, filing jointly, married, filing separately, or head of household. So say somebody had a taxable income of $51,425. So we would go down and find, if we had $51,425 is bigger than that, and it's less than $51,450. So we would use this row of the table to figure out what our taxes was depending on our filing status. So hopefully that makes a little bit of sense. So example 1, Ron is single, so we know his filing status is going to be single. He is using an IRS tax form and calculates that his taxable income is $51,482. The instructions tell him to use the tax table to determine his taxes. How much does Ron owe in taxes? All right, so we're looking for the interval, which is going to have $51,482 in it. Oh, there goes my cat. Excuse him, he's very bossy. All right, so $51,450 to 5. Okay, so $51,450 to $51,500. That's the interval that's going to have $51,482 in it. So this is the line of the tax table we're going to use. Now he is filing single, which is the first row. So his taxes are right there. He owes $9,213 in taxes. Uh, 9213. So there you go. That's all you got to do to read your table. All right. For example 2, I don't know if you noticed, if you printed off the notes, but the last page of the notes, let me zoom out a little bit. The last page of the notes is all tables. For example 2, we've got tax tables for $77,000, $80,000, and $83,000. So we're going to use these tables for example 3. Down here, it says for examples 5 and 6, but it's actually 5, 6, and 7. We're going to use this tax schedule. And then for example 8, we're going to use this tax schedule. So that's what these are all for. All right, so example 2 says to determine the tax for each filing status and taxable income amount listed. So for number 1, we're doing a single filing. $80,602. So let's go to our table on the back. Let's see, it's 80,000, so we want to use this table in the middle that says 80,000. And then we're looking for the interval for 80,602. So right here is 80,600 to 80,650. So that's the line we're going to use. And we're filing, this is a single. So this is our tax amount right here, $16,553. So $16,553. Part B, we're filing head of household. Our taxable income was $83,527. So we're going to go to the table that says 83,000 up here, and we're going to find our interval. We got 83,527. So that's going to be here in between 83,500 and 83,550. And we're filing head of household, so that's this last column. So we're doing this right here. So 15,944 is our taxes. So 15,944. Part 3, married filing jointly, $77,777. All right, so this one is 77,000, so we're going to go to this table that says 77,000. 7,000, let's see, 77,777. So that's going to be here in between 77,750, 77,800. This one is what? Married filing jointly, which is your second column. So their taxes are going to be right here, $12,131. So $12,131. And then Part D, married filing separately, $83,050. So go to our table, $83,000 and what was it, $50? Okay, so you'll notice we've got $83,050 here and here. So this one says that your taxes are at least $83,000, but less than $83,050. So our taxes are $83,050. So we're going to use this one because our taxes are at least $83,050, but less than $83,100. So if you have your taxable income is equal to the amount that is the same on each row, you use the one where it has that number in the first row. And we are married filing separate, which is the third column. So that's $17,633. $17,633. And there are your taxes. Okay. Number 3 says Maria and Dawn are married taxpayers filing a joint return. Their combined taxable income is $153,900. The IRS offers a tax schedule so that taxpayers can calculate their tax. Use the tax schedule to the right for married taxpayers filing jointly to calculate Maria and Dawn's taxes. All right, so if you look at your tax table, it's basically has the intervals just like your tax table does, but the tax schedule, instead of giving you the tax amount, it tells you how to calculate it. So that's what this right here is telling you, how to calculate your taxes. So first thing we have to do is figure out which interval we're in. So we've got the intervals from 0 to 16,050, 16,050 to 65,100, 65,100 to 131,450, 131,450 to 200,300, 200,300 to 357,700, and then above 357,700. So they have $153,900. So 150, that's going to be in this row right here. So this tells us that their base tax is $25,550. But they also owe 28% of however much money they have above $131,450. So what we're going to do is figure out the difference between their taxable income and this number right here. So I'm going to put that in parentheses. Well, we know it's 28%, so I'm going to put 0.028 because that's our percentage for our tax. And then they made $1,530 or $153,900, and we just need to see how much of that is above $131,450. All right, so that's the formula we use to figure out the taxes. So get out your trusty calculator. 25550 plus 0.028 times 153,900 minus 131,450. So they're going to pay $26,178.60. That doesn't seem right. All right, let me try it again, because that's something different than what I got before. 25550 plus 0.028, nope, that might be where I messed up. 153,900 minus 131,450. There you go, that's better. So $31,836 is what they owe in taxes. So 31,836. Example 4. Using the tax table from example 3, what taxable income would yield a tax of exactly $8,962.50? All right, so let's look at our tax table. Now, we are looking for a tax of exactly $8,962.50. If you look at our taxes right here, you'll notice this right here has the base tax, $8,962.50. And then you would pay 25% of anything above $65,100. So if we don't want to pay anything more than this, then we're going to do 25% of nothing. So we don't have any, to be able to get this as our tax, we don't have anything above $65,100. So that's your taxable income. So $65,100 taxable income. Anything more than that, and we're going to have to do 25% of it and add it on to give us, add it on to that total, and we wouldn't have that exact tax. So that's our taxable income. Okay, so the example 5. The IRS includes the tax schedule for information purposes only. For taxable income over $100,000, taxpayers must use the tax worksheet. Here is a portion of the worksheet, right here. And we're going to use this to calculate Maria and Don's taxes from example 3. All right, so we're working with this tax worksheet right here, section B, which says use if your filing status is married, filing jointly, or qualifying widower. All right, so basically we can do the math on here if we wanted to, and it probably would be easier to do. So let's just do our work on this sheet. So Maria and Don's taxable income was $153,900. So again, we've got intervals over here, and we need to figure out which of our intervals that falls under. Jeez. So 153,000 is going to be in this right here because it's over 131,000 but less than 200,000. All right, so the amount from line 43, that's your taxable income, and that's on line 43 in the tax form. So 153,900. All right, so then it tells us we're going to multiply by 0.28. So we've got, get out your calculator, 153,900 times 0.28 is 43,092. So we're going to write that in this next box right here. What was it? $43,092. And then it says subtract amount. So we're going to do this number minus this number. So 43,092 minus 11,256. And that gives us 31,836, which I believe was what we got in example 3 also. So let's look. Yeah, that's exactly what we got in example 3 also. So you get the same tax for Maria and Dawn, regardless of whether you use the tax schedule or the tax table. So let's see. I'll put C table on last page for work. No need to write it out again since we already did it. Taxes were 31,836. Example 6. Davida and John have a taxable income of $118,675. Use the married filing jointly worksheet to determine the amounts for column A and C. What is their calculated tax? So we're using the same table we used in the last one. Column A and column C are these two columns here. So we know we got to figure out which one of our intervals their taxes falls under. 118,000. So that's going to go in this first row because it's above 100,000, less than 131. So our column A answer is just what our taxable income is, which is 118,675. So column A is their taxable income. All right, so then to find our column C total, we do column A times, in this case, 0.25, because the tax rate is 25%. So 118,675 times 0.25 is $29,668.75. So that's our column C total. So column C was $29,668.75. All right, and then the last thing we need is our tax. And so to get our tax, we're going to do column C minus this number. So column C minus $7,312.50. And that gives us $22,356.25. So 22356 and 25 cents is your taxable income. Or not your taxable income, your tax. So your tax, $22,356.25. So there you go. All right, Chase has a taxable income of X dollars. This is example 7. This amount is over $100,000, but not over $131,450. Express his tax algebraically. So we're going to write an equation, and we're going to use our table from examples 5 and 6 to do that. So more than 100,000, less than 131,400. So that's this right here. And so basically what we're going to do is your column A, we don't know their taxable income, that's just X. But we do X times 0.25. So normally we put the number in front of our variable, 0.25x. And that gives you your value for part C. And then we subtract off, so minus, oh, where am I? There we go. Minus $7,312.50. And that gives you your tax. So that would be our equation right there. Now, if you want to double check, we can plug in what we did, or our taxable income from part number 6, because that was using the same column on our tax table. Let me double check. 0.25 times 118,675, and subtract off 7312.50. And that gives us exactly what we got for the tax using the table. So that's our equation for finding the tax. All right, example 8. Calculate the tax for each of the taxable incomes using the tax computation worksheet on the next page. So our first one, our taxable income is $189,000. So this table is Schedule A, or Section A, which is exactly like Section B, which we used for examples 5, 6, and 7. The only difference is this is for filing single, and the other one was for filing married, filing jointly. So again, we find our interval, that's our taxable income, multiply it to this to get this row, subtract this to get the last row. So our first taxes, our first income is $189,000. So $189,000 is going to be in this row right here. So column A is $189,000. So to get part C, we're going to multiply by 0.33. So 189 times 0.33 is 62,370. And then to get our taxable income, we subtract off 14,249 minus 14,249.25. We get $48,120.75. So 48,120.75. So that is our tax for part A. So back here, example 6, part A, it was $48,120.75. All right, part B, our taxable income, $115,221. So that's going to go in this first row in our tax table. So the total was $115,221. All right, so for this one, our tax rate is 28%, so we're going to multiply by 0.28. So 115,221, no, 115,221 times 0.28 is $32,261.88. And then to get our tax, we're going to subtract off this total. So minus 6021.75. So $26,240.13 is our tax. On Part C, our taxable income, $372,951. That is in our last column because this is $357,000 above that, so that's going to go in our last row. So 372,951. This time our tax rate is 35%. So 372,951 times 0.35, 130,532.85. I'm running out of room. And then we're going to subtract off this total to get our tax. So subtract 21,403.25. I got $109,129.60 for the taxes. So 109, 129.60. There you go. So that's how to calculate your taxes using tables, worksheets, and schedules. Remember, I've got office hours every day, Monday through Friday, from 9:30 a.m. to 10 a.m. I post the link to the Zoom meeting in our Google Classroom. So if you have any questions or need any help on any of this, please find me on the Zoom meeting, or you can email me or send me a snap, and I will help you. Thanks.